it up.
Hello and welcome to Trust and Estates Weekly. Starting just a minute or two late here with a little technical difficulty. So I'm your host, Kevin Bemmel. And for those of you who are longtime watchers of the show, you're looking at me and say, "What again with the eye?" Yes, I am. I'm not going pirate. my vision problem is back, and people tell me that my eye looks horrible, so I figured I'll just block it off so you don't have to be tortured by it. But I'm very pleased today to have a guest, Robert Karpas. Robert is an accountant based in Temecula, California. He's been in the accounting field for a long time. And freshly off of tax season, Robert agreed to come on the show and talk to us about one of his specialty areas of practice, which is dealing with trusts and estates. It's always good to get another professional's perspective on especially some of the difficulties and challenges that they faced in handling their part of administrating or dealing with a trust and estate. So Robert, first of all, thanks for coming on the show.
Thank you for having me.
Good to see that you're still smiling after tax season, right?
Yeah.
As we were talking a little bit before the show. So before we get into specifically the issues related to trusts and estates, if you would take a couple of minutes and talk about your background so viewers can understand who you are and what your experiences are.
Sure. I was born and raised in Hungary, immigrated in the early 90s to the U.S., spent a couple of years in Austria, got my paperwork there and my visa, refugee visa, spent 2 years in a refugee camp there, then moved to San Francisco. Early on realized that intellectual property is a lot more valuable in the United States than physical labor, which is the reverse of Eastern European countries. It's very interestingly, teachers or administrators or CFOs or those kind of individuals didn't get paid as much as the contractors or plumbers or those kind of people. Very interesting. Yeah. Mm-hmm. So, but I started working as a mover, and I realized early that there's no way I can move furniture when I'm 40 years old. So quickly, I was like, I got to go to school because my back is gonna give you at any time. Imagine
Right.
moving out these pianos, grand pianos in San Francisco, and 2-3 level homes, on these streets that are like 16 degrees, and so like, no, I can't do that. So and then I moved. I did limo driving, and then I talked to some of the executives. I was transferring from East Bay and to Silicon Valley and everywhere else, and realized that's when I realized that intellectual property and then being a working with your mind rather than your hands pays a lot more. So I realized I need to go to school. Went to school, college in Notre Dame in Belmont, California. Graduated there, and then while I was working, I had the option to go either public accounting or corporate accounting, and I worked in a corporate accounting field in various hospitals and different industries, and I realized that I don't like that area. It's just very mundane and task oriented and repeating everything month over month, year over year. So it wasn't my forte. So I went into public accounting, basically doing tax returns first. Smaller companies worked in San Francisco and the Bay Area for until 2000, and then life changed. Moved to LA from 2001. I continued working in the entertainment industry for a lot of the large entertainers. John Bon Jovi was one of our clients that I worked on, and various other ones, with these large companies that have East Coast and West Coast um, presence, and I liked that very much. And then in 2005, I went out on my own. So in 2005, we started a business. My business partner and I grew it to a good size, over 300 clients we had at one point.
Wow.
Well, actually, when I sold, then in pandemic came another life change, and my business partner wanted to sell out, so I told her to go ahead and buy me out. She did. Then I moved to Temecula 2 years ago. Now we have I work from my home office, business clients, trust and estates, full service accounting, and we also have two Airbnbs that our clients come and just stay for the weekend and enjoy the quietness and the view and the birds chirping and no lights. That's it.
I think apple picking and wine, right, in Temecula?
Yeah, exactly. We have a lot of wineries. We have a lot of weddings that people come to. Some people just, like I say, come to do nothing. Some people come to party all day and then come out for the weekend. Exactly, just
Yeah,
come home at night and then go back next morning to
right.
the city and do a little bit more of it. Yeah.
So my mother lives in Oceanside, and she
Okay.
goes to Temecula periodically for the wine and the apples and this and that. So
Right,
yeah.
right. The other side, exactly. Yeah, that's where we get all of our breeze. So yeah,
Uh-huh.
exactly. Yeah, yeah. Ocean breeze coming from Oceanside and from the Pacific Ocean. So we get a nice, cool little weather on this side. Yeah.
So just as a side note, I was in Hungary in the early 1990s,
Okay.
um, and so it must have been around that time that it must have been around the time that you left. And I remember it was one of, if not the hottest summer on record that I was
Yeah.
there. It was brutally hot, but it was
Mm,
um, a, a, um, I was in Budapest, of course.
mhm,
Then we went to Debrecen and
mhm.
some of the smaller towns,
Okay.
kind of out in the countryside. Quite a beautiful country and
Yeah.
a tremendous amount of history. So
Yes, 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 yes. Yeah, I
yeah,
was one of the last ones actually who came. It was able to escape from the country before the wall came down. So I was able to get my refugee visa after January of '89, basically, or Aprilish or the spring of '89 is the wall
mhm,
came down and nobody else was able to leave not leave the country. They were able to more. Therefore, they couldn't get the refugee visa because they didn't have the restrictions
right.
as we did before. So
Yeah, yeah. Interesting.
yeah, it was
Well,
2 weeks before. I'm sorry, 2 weeks before I was gonna get drafted to the army. Before I
ooh,
left, was able to
wow,
leave. Yeah, so
wow.
it was really down to the wire. Basically, that's the reason. That's the reason I left because I didn't want to serve in the army. For
Right,
necessarily. So
right.
I left.
So you are really the classic American success story, right? Come from a refugee from another country
Yeah,
and come here and work hard and figure out your path to success. So
yeah, basically, yeah, exactly. Yeah.
let's focus now on the trusts and estates part of your
Mhm,
business. How did you get involved with that, and what kinds of matters have you dealt with
mhm.
in that part?
Well, I started early. One of the firms I worked with, they did, as most accounting firms do, trust and estates for their clients. So when they pass away, that's one of the
Hmm.
required things before we had these large exemptions was to do a trust and estate, do an estates basically a 706 and prepare and if there are any if there are no surviving spouse basically then pay the required required estate taxes, right, and then
Hmm.
pass down the remainder of the estate to the beneficiaries. So I worked for a few firms that had older clients, and I've done various estate tax returns as small as $5 million to as big as $70 million estates. So that's how I kind of fell into the business, is just by doing it, by having exposure to it and realizing early that that's something I liked and enjoyed, finding the assets, valuing the assets, putting the paperwork together, finding all those things, finding out what the clients had and everything else. So this $70 million client had a large car collection. So we had over 30 old 1960s cars. So
Wow.
yeah. So he had, I remember he had a Shelby, a Ford Shelby that was
Wow.
on that. Yeah. And I didn't see what, but I didn't know what that was before. But the price was extra amazing, huge. I think a couple $100,000 or something. Oh my God, what is this car?
Right. Yeah.
So yeah, so that was, I still in my mind was like, oh, Shelby Corvette. And interestingly enough, just this weekend we had the Temecula car show, the antique car show, and they had one of the Shelby Corvettes. I mean, not sure Corvettes, Mustangs. Shelby Mustangs on display over here. I was like, oh, that's the car that this guy was like, wow, it was $200,000 15 years ago. Wonder how much it is now. So
yeah, wow,
it was beautiful, but I'm sure it's fast. So that's kind of how I fell into the business, and as I grew my business, I started my business. I continued to do same thing basically, as clients passed away, and then we had to do the 706, and lately didn't have to do a lot of 706 because of the large exemption. So the only time we did 706, and then that's what I'm doing right now, is just to do the portability, right? Exemption portability, since we don't know what's going to happen after 2026 with the new government coming in. We don't know how big if the exemption is going to be. Could be 2 million. Some people say 5 million. But if an estate is over $5 million and they can have an extra 11 million dollar of exemption, it's worth paying an extra, paying $10,000-15,000 for just to put together a 706 and file it with the government, just in order to be able to potentially claim that exemption later on. That could save 40% on $10 million. So 45%, right? Up to 55%. So it could be $40,000 to $55,000, right? I mean, 4.5 to $5.5 million could be potentially.
So if you don't mind, for people who are not real familiar with the concept of portability, would you explain what that means so people can understand better what it is that you're talking about?
Sure. So when the first spouse dies, each spouse has a exemption, right? Estate tax exemption that started around 10 million, and I believe we're up to now over $11 million right now. So it's a big number,
right? Yeah,
so
I think it's 13.6 if I'm not mistaken.
It is now, okay, 13.6. Okay. So if you file a 706 within 5 years of the death of the spouse's death or the person passing away, then the surviving spouse can carry over that 10 to 13 million dollar exemption with themselves. So when they pass away, the entire estate will get the exemption, the current exemption when the surviving spouse passes away, plus the ported exemption for the first spouse's passing away, basically. So the exemption can be anywhere from 10 million to $18 million, let's say, if the new law is at $5 million, let's say, right? And they transferred over another 10 million for the first spouse, that would be a $50 million exemption, or up to today is $13 million in 2024. So it could be an $18 million exemption. It's a big difference, right?
Right. Yeah.
Right. So that's what I'm doing right now, just to make sure, just file something with the government saying, hey, we have a first spouse passed away. here's the estate, half the estate that belonged to the spouse. Here's the exemption. We want to carry it over that exemption because it was below the exemption, so they didn't use any of that exemption.
Mm-hmm.
The surviving spouse would like to carry that over with them to their passing away, basically.
Right, right. And so then the estate can continue to grow, but still be protected from estate taxes
exactly
going forward. Wow.
Exactly. So the survivor or the beneficiaries could be kids, grandkids, or basically those two, right? Or other family members, whoever, or charities, whatever. They can get more of the remaining estate, right? And the estate is not going to be eaten up by large tax bill, basically, or 45 to 55% of the estate, right? That's a huge difference.
Yeah, I mean, I have a case I'm working on right now where, unfortunately, the decedent didn't do really well. He did some estate planning, but he never put the estate plan in force. Passed away, and now the estate is going to get hit with a huge estate tax bill because there was no provision made, to cover the estate taxes, whether it's through life insurance or whatever. Right. So the estate is going to lose probably somewhere between 25% and a third of its value.
Wow. So I'm talking about, yeah, exactly. So it's huge. That's huge, and it's a huge hit for the kids or the grandkids, for the next generation to that they could have grown further and have a larger estate to continue living off of it, basically.
Right. And in some ways, the heir is lucky because the estate is heavy on real estate, and the value of the real estate has dropped considerably over the last few years. So, the estate tax bill has dropped concurrently. The value of the real estate, of course, can recover, but once you have to sell something to pay taxes, you can't get that back. So, it's there have been some sort of ameliorations, if you will, to the problem, but yeah, so it's very unfortunate that he didn't finish this estate plan, and the decedent didn't. So want to go back to you mentioned the estate with all of the classic cars. So one of the key things, as I understand it, that an accountant can help with is establishing what the stepped up basis is for assets, right, at the time someone dies. So if you wouldn't mind talking about that, and for something like these classic cars, how did you figure that out, right? And in serving, your client, or in serving the estate.
Well, we always require a professional appraisal, especially with rare cars, collectibles, coins, something that's not readily available on the market, right? We need somebody who can value that has the professional experience to value these things, and that we can put in front of the IRS, or actually package it with the 706. So when the IRS looks at it, it say, oh, it's not Joe Schmoes, or we Googled it and found it on the website, right? What the value is, but rather we hire the professional appraisal, and this is their professional opinion to value that estate. Otherwise, the clients can get into a large, long, and expensive battle with the IRS because, like I was saying, you were saying 25 to 45, 55% tax rate. That's big money for the IRS. So they always, not always, but especially larger the estate, the most likelihood that there could be an audit. So if you don't appraise this car correctly and just say, hey, I think the value is $250,000, or actually you would say $50,000, but in fact the IRS look at some other auctioneers and valuations, and they come up with a $200,000 value, right?
Mm-hmm.
You're gonna have an IRS audit in your hands, and you're gonna have to prove it why you think your car is only $50,000 versus $200,000, and it's gonna cost you a lot of money defending it, going to court, going to the IRS tax court and everything else because it's big money. So we always require professional appraisal, whether it be real estate, cars, anything of value, large value,
Mm-hmm.
because we always attach those to the 706 so that that's not going to be an issue. You know,
Mm-hmm.
if there is, then now they have to bring the fight up with the appraisal versus us as the CPAs.
Mm-hmm.
It wasn't our opinion. It was a third party, independent third party that had no involvement in this case. They had no attachment to it or to the outcome. So that's how we always do it. You know, cross
Interesting.
our T's and dot our I's, right?
Right.
That's it. I wouldn't want my clients to get into an IRS audit. If that's what the estate, that's what it is, and that's why it's
Right.
good to have put an estate in plan before date of death, right? So
Mm-hmm.
that you can avoid these things. Set up different trusts, set up different transfer assets into an irrevocable trust before date of death, especially those assets that could grow, increase in value, stocks, real estate, maybe these old cars, right? Collector
Mm-hmm.
cars, so that you can keep these out of the estates, or like you were saying, buy an ILIT, right?
Mm-hmm.
Irrevocable life insurance trust, basically,
Mm-hmm.
where the trust puts money in to not the trust, but the owner of the trust basically pays for life insurance, right? That's
Mm-hmm.
outside of the estate because it's irrevocable trust. And
Mm-hmm.
when he passes away, this trust receive this large sum of money from which they can pay the estate taxes if there was
Right.
no other choice or there were no other estates estate planning ideas came up, right?
Right, 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 exactly. And I remember another case I was involved in, and I was actually in doing the real estate appraisals for it. And
Mhm.
the estate lawyer called me up and he said, "Hey, do you know anybody who can appraise?" It was a particular breed of horses, of
Mm.
all things, right? Because it
Yeah.
was one of the major assets was a ranch where these horses were bred. So I said, "Well, I don't," but I said, "Look, I'm in the appraisal business, so let me call around and I'll get you a referral." And I called several livestock appraisers across the country, and without identifying, you know, the property or the decedent or anything, they all said to me, "Well, the only person in the country who can appraise these horses properly is such and such, who was one of the heirs to the estate."
Oh wow. Okay.
Right. And so, I noted all of these down. Excuse me. It was, like I said, 3 4 of these livestock appraisers across the
Uh-huh.
country. And I went back to the lawyer and I said, "You know what, everybody is saying that the top person for doing this is, it was one of the children of the
Mhm,
decedent.
mhm.
She's the one who knows this." And I said, "My recommendation is have her do it and then let the IRS try and find
Right,
someone, right, who can do it better than she
right,
can.
right, right.
And look, as long as she's, putting her appraiser hat on, so to
Right.
speak, you probably have the best valuation." And that's what he ended up doing. And in this case, I think the IRS, because of the background checking we did and
Mhm, mhm,
submitted to them,
mhm.
they accepted it. But that's a rare exception to the rule that I think the rule that you gave, that I think is absolutely true, which is you want these third party valuations in order to make sure that an IRS challenge is not going to be successful.
Right.
So,
Yeah, yeah.
right, because once you're in that realm, you're you may win eventually, but it's going to be very costly. And if you don't win, now you've got penalties and all kinds of stuff, right?
Yes.
So we have only a few minutes left. So what are some of the other challenges that you've dealt with from the accounting perspective as you've dealt with various trust and estate matters?
Well, the other account is the estates when the first person dies, or the only person passes away, right? There needs to be some accounting done for the courts,
Mm-hmm.
so that the courts know what the values are, what the assets are, liabilities are, and everything else, right? So those are some of the issues that deal with is creating these accounting packages for the courts, so that the courts know exactly what can be distributed, what the values are, how much money is owed, who are uh, the creditors. That's some bigger issue as well. Making sure you find all the creditors, because once you distribute that money, it's going to be hard to get money back from beneficiaries. They spend the money, they do whatever they do in their lives, right?
Right.
And and uh, and um, and the money is gone. It's going to be hard for you to collect some of that money back and pay it to that creditor. So you got to make sure that you hold some of that money back, and you don't distribute the entire estate out. You do waiting for the waiting periods. Make sure no new creditors coming out and say, hey, oh, by the way, this person still owes me. Make sure you go through bills, final bills, make sure they're all paid off. Request some kind of a payoff memo showing that the account is paid off in full. There's no residual amount due, everything else. So that's how I deal with the estates, making sure that by the time it goes to the court, everything is backed up. We have a backup for everything. We always have, documentation, just like you did in that phone call. 3 or 4 people say, this is the person. For us, we have the documentation from either a final bill, either a statement, latest statement showing it was paid in full, or if it's paid off, then we just send them the copy of the check, and we get another statement showing that that's full, and then close down the account. Or making sure also to close those account down, because so there are no new charges come afterwards, right? Somebody's
Right.
using the credit card or everything else, then that creates a bigger nightmare. Who's the one using it?
Right.
Is it one of the beneficiaries? Now you're gonna have to take it out of distribution. They're gonna be not happy. So, and that's the other thing. One more thing is the beneficiaries. They want their money right away. Immediately. When can I get my money? When can I get my money?
Right.
And it takes a process. It takes 12 months to 18 months sometimes, or more,
Mm-hmm.
to effectively close down an estate.
Mm-hmm.
And some people cannot wait that long. You can give them a little bit of money if you're a trustee, but I suggest hold the biggest, most amount of money in until you go through the entire process and the courts approved everything.
Mm-hmm.
Not that I'm not involved in that, but I'm the accounting side of it is I
Right.
get ready everything for the professional fiduciaries like you
Right.
to present in front of the court.
Right. Right. Yeah, absolutely. I couldn't agree with you more on that advice to really set realistic expectations for the beneficiaries from the get go. I had this issue in another case that I'm dealing with where one of the lawyers was saying, oh, we're going to have this done in a couple of weeks, or we're going to have this done in a few months. We'll probably have this whole estate wrapped up in 3 to 4 months. And I'm like, oh, it's not
No
going to
way.
happen that fast. Just,
No.
I
You
mean,
can't even get into
especially
court
when the
in
courts are
3 or 4.
involved.
Yeah.
You go ahead. I'm sorry.
Sorry, I was gonna say you can't even get into the court in 3 or 4 months,
Right.
right?
Yeah.
It's probably going to take you 6 months to get into court,
Yeah,
right?
exactly. Even if you're going on an emergency ex parte, it's
Okay.
still the courts are busy, so
There you
you
go.
got to get in line.
Yep.
Well, Robert, unfortunately, our time is up, but I really appreciate you coming on and sharing your expertise with us, talking about some of the challenges that you've dealt with.
Mhm.
I think it gives people first of all, a motivation to get their own estate plans,
Oh,
you know, in order, right, to avoid some of these things,
absolutely.
but also helps them understand, you know, better how this whole process works.
Mhm.
Um, and also, by the way, I really appreciate you sharing your background coming here and talking about, you know, getting yourself, you know, established here in the United States. It's really it's an inspiring story.
Thank you.
You know, it's really wonderful to hear those kind of things. We hear so many, you know, stories of trouble and all of that. That it's you know it's good to hear that you know that for you, you know, that this country really you know lived up to her I guess better angels, if we will.
Sure.
So,
Absolutely, absolutely. Yes.
if you don't mind, I'm gonna wrap up the show, but I'm gonna have you hold on. I actually want to talk to you about a potential piece of business for you after we after I sign off here. So folks, thank you very much for joining us. I appreciate it, and I know you got a lot out of hearing. Robert's expertise and some of the stories that he told. So, if you have any questions, or if you want to get in touch with Robert, you have you know an accounting matter that you'd like him to handle, I'll put his contact information in the show notes after the show posts on our YouTube channel. So feel free to check it out there. And you, like I said, you can get in touch with Robert, and I'm sure he'll be happy to speak with you and help you out. And you can hear what a solid professional Robert is. So I would encourage you to get in touch if you have questions and things that you need done. So looking forward to the rest of the week real quickly. Tomorrow on Tuesday at 10 a.m. Pacific time is my show, Business Lessons from the Military. And then on Wednesday at 10 a.m. is my show, People Making Money. My guest is Adam Wiseman. He's a media and entertainment attorney based in New York. And I think he will have a fascinating story to tell, just like Robert did. And so I invite you to join me on Wednesday in my talk with Adam. And this, I think this is the first time we've delved into the media and entertainment business. So, and Adam is very, very sharp in that regard. So again, that's on Wednesday at 10 a.m. Pacific time. And then a week from today, of course, next Monday, we'll be back with the next edition of Trusts and Estates Weekly. So once again, thanks so much for joining us. Wishing you a wonderful rest of the day, and signing off as I always do. Marie, darling, you are my belle. All the best, folks.